touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Bakil. First, the headlines. Asian stocks are off to a positive start after strong earnings from companies like Walmart lifted sentiment on Wall Street. Trade representatives of US and China will begin the second round of trade talks today in Washington as the March 1 deadline draws closer. The 33rd meeting of the GST Council will take place this afternoon in New Delhi today. Changes in real estate and cement sector are on the anvil. Prime Minister Narendra Modi received Saudi Crown Prince Mohammed bin Salman in New Delhi last night. The two leaders will hold extensive talks on trade and terrorism today. And the Supreme Court will pronounce its verdict on the Ericsson-Reliance communications dispute as well as the contempt petition against Anil Ambani. Now, US stocks closed higher Tuesday with the Nasdaq extending its winning streak to a seventh session as another round of US-China trade talks began in Washington. Abigail Doolittle of Bloomberg News wraps up all the Wall Street action in this report.
Stocks finished modestly higher in Tuesday's Wall Street session, the start of a holiday-shortened week for trading action here in the U.S. Monday, of course, markets were closed for President's Day. But on Tuesday, after being slightly lower earlier in the session, the Dow finished fractionally higher, while the S&P 500 and the Nasdaq both closed up by almost 0.2%. So anyway, you slice and dice that very small moves, pointing to the idea that investors are treading water, waiting for more information on macro factors such as trade, the Fed, the Brexit, lots of different issues that investors are waiting on the sidelines for to see more resolution before either buying or selling in a more notable way. Where we saw very distinct buying, though, the metals and mining space. That index for the S&P 500 subsector up 3.7%, its best day since early January. And that was helped by copper being up 2.6%, gold, silver, and platinum all up more than 1%. And all of this seems to have been driven by an upgrade over at Citigroup of Freeport-McMoRan to a buy from a hold, Southern Copper to a buy from a sell, citing the firm's bullish outlook on copper. So lots of strength for the metals and mining space. There was also strength for Walmart. Those shares up 2.2% on the company's best holiday quarter ever, and online sales grew by 43%. That seemed to provide a tailwind for Amazon. Those shares up 1.2%. So some strength there for Amazon on the day. We also had strength, speaking of more green, Bitcoin up for the second day in a row. Bitcoin spot up more than 10%, the best 2 days of the year on some technical buying. And those buyers, the technicals appear to be bullish to some degree, suggesting that Bitcoin's bounce may just last. In New York, Abigail Doolittle, Bloomberg News.
Right then, let's take a look at the Asian markets. We have Rosalind Chin of Bloomberg News joining us live from Hong Kong. Rosalind, good morning.
Good morning. Well, we have Asian markets here continuing to make gains early in the session. Now, we did have some numbers out from Japan, trade data that was a little bit ugly, but investors do seem to be shrugging that off. So we had exports falling for a second straight month in January, down 8.4% against a forecast of a fall of 5.7%. Exports to China down by 17.4%. On the imports front, it was down 0.6%, which was actually less than the 3.5% expected drops. Overall, though, the trade deficit was worse than expected, adding to signs of the global slowdown. But still, the stock markets are up. We've got the Nikkei 225 making gains of 0.7%. The Topix up by more than half of 1%. The MSCI Asia Pacific Index is up by 0.6%. Japan, of course, contributing heavily to that. Over here in Hong Kong, the markets just opened a few moments ago. The Hang Seng is up by nearly 1%, up by 0.9% at this point in time. Shanghai Composite just about flat, but still in positive territory. And the CSI 300 making gains of about 0.25%. Now, we have seen the yuan that is currently now at 110. I'm looking at the yuan, the Japanese yen there, 110.86 to the US dollar. The Chinese yuan, we're looking at the offshore number that is at 6.7426. That, of course, has been in the headlines because we've seen the US, according to Bloomberg sources, asking for China to keep the yuan stable against any signs of that they might depreciate the yuan in the face of any higher tariffs that may come in terms of these trade discussions that the US and China have been having. Of course, putting the yuan in the spotlight. And then the question becomes, how much of yuan moves are down to manipulation and how much of it may be down to policy. On the commodities front, a quick look there because we've obviously had copper and iron prices continue to rise after supply squeezed because of the disaster at Vale mine in Brazil. And a quick look also here, I'm just going to pop down here to look at oil. Briefly mention this, we've got the Brent crude at $66 a barrel and WTI at 55. Back to you.
Thanks for that, Rosalind. But let's stay with China. A Chinese delegation led by Vice Premier Liu He arrived in Washington for the second round of trade talks with the U.S. delegation. We'll be meeting Trade Representative Robert Lighthizer and Treasury Secretary Steve Mnuchin later today. Tom McKenzie of Bloomberg News gets us up to speed with what's expected from the round of talks ahead of the March 1 deadline.
Well, potentially some pretty broad implications for whether that's foreign inflows into China's capital markets or Chinese corporate holdings of dollar debt, or, of course, policymakers' ability to ease additional easing measures from Chinese policymakers. All of these things now are question marks around them if indeed this pledge to stabilize the yuan does become enforced in any deal between the US and China. And what we do know at this stage, as you say, is there's been a tentative agreement. This has been discussed amongst a number or within a number of different talking meetings between the two sides, a tentative agreement to include a pledge to stabilize the yuan as part of a memorandum of understanding that would then potentially go to the two presidents at any future meeting to sign off on. And of course, President Trump on the campaign trail made a big play about calling China a currency manipulator. The Treasury Department found no grounds for pulling that in and putting that in place and labeling China a currency manipulator. But clearly, amongst the US administration, Trump's administration, this is clearly still on the agenda, high up on the agenda for them. In terms of China, of course, the PBOC and other officials have stressed that they do want to keep the currency stable, indeed, and that they will not devalue it as a response to the trade war. But clearly, it remains a concern for the Trump administration. Now this is being seriously looked at by both sides.
With 37 days to go for Brexit, Prime Minister Theresa May heads to Brussels yet again, hoping for a breakthrough with the European Union. While the pound rallied on Tuesday over optimisms, EU President Jean-Claude Juncker is said to have been running out of patience over Brexit. Jody Schneider of Bloomberg News brings us this report.
Well, so Theresa May is going to go to Brussels and meet with the EU Commission President, trying to get changes, legally binding changes, to that Irish border backstop, which has proven to be such an obstacle to getting a Brexit deal through Parliament. Yet the EU President says that he's minimizing chances for a breakthrough and basically expressing his frustration with Brexit, saying he's losing his patience. So it's up to Theresa May to try to get those changes, to try to bring them back and get them through Parliament before February 27th.
The problem right now is that the EU has repeatedly said that they will not reopen the withdrawal agreement. So what could we expect then?
Yeah, that's true. They have said this is a take it or leave it deal. They've made that clear. So if she does get a deal, if it's in that unlikely scenario, she would try to bring it back to Parliament before February 27th, which is the date that those who don't want to leave the EU without a deal say they will take over the process in Parliament. If she doesn't, then it looks like that will happen anyways. And the real question is, can anybody get anything through before that March 29th deadline, or is it all going to be about talking about extending that deadline or trying to extend that deadline? Many quarters see the no-deal Brexit as really a non-starter. However, and we've heard more about that in recent days. The business secretary Greg Clark came out and said it would be a disaster and a hammer blow to UK industry if if the UK leaves the EU without a deal. So this has all got to happen pretty quickly. March 29th is that deadline, is that divorce deadline.
Okay, then let's take a look at the trade setup today and see how things are panning out, because we're looking at the SGX Nifty, and that's advancing by around 53 points. Perhaps today is a day where we can expect some respite for the markets, which have come off by as much as when the last 8 days, straight days of losses coming through. The Nifty declining by around 0.3%, and we have the small cap and mid cap indices actually doing well and advancing and outperforming the broader markets. And it's the same for the banking Nifty indices too, with the Nifty PSU banking index specifically up as much as 1.3%. But in terms of stocks listed abroad, we have gains in Tata Motors, Vedanta and Dr. Reddy's, along with ICICI Bank, and some weakness in Wipro, HDFC Bank and Infosys. Now, of course, FIIs are continuing to sell in markets, and DIs on the other hand bought around 1164 odd crores worth of equity in markets. We have seen about a 37 point decline on the indices, with the TCS, Infosys and HDFC Limited among those which bear down on the index. And in terms of futures and options, again, mixed cues coming in there. So, well, we do have about 2.7% increase in open interest towards shorts once again in the Nifty. And the banking Nifty futures are also seeing, well, some increase, but not necessarily towards shorts, considering the index closed largely flat. But this is your open interest distribution, while on the higher end, the 11,000 mark remains the one with the max OI. On the lower end, you have 10,400 as the one with the max OI. So it's a 600, 700 odd point range. A lot more writing coming along the 10,700 call. So watch out for that. The Nifty put call ratio, okay, there's a VIX, of course, has risen further at around 2.6% to around 18.5. Nifty put call ratio largely unchanged at around 1.12, and the Nifty banking put call ratio also the same, largely unchanged at 1.12. Among stocks which are in the F&O band, we have Adani Enterprises, IDBI Bank and Jet Airways, Reliance Power, PC Jeweler and Reliance Infra, and of course CG Power and Gen Irrigation as well. So we'll be watching out for that as well. And pardon me, we have Engineers India along with ITC and Infosys among those stocks which are actually gained quite substantially in open interest. And let's pull up the stocks which are seeing unwinding. We have Reliance Infra, ACC and Repco Home Finance seeing some sort of unwinding. So these are just some of the stocks out there to watch out for. But now let's see what's making headlines across the globe. We have Sue Keenan of Bloomberg News bringing us the first word headlines.
Japan's exports are being hammered, falling the most since last month, or I should say last month since 2016. Outbound shipments were down 8.4%, and that's much worse than the 5.7% decline that was forecast. The slowdown in China and the ongoing trade war are being blamed, with shipments to China tumbling more than 17%. The BOJ says that means it must maintain stimulus to meet its inflation targets. Malaysia and China may revive a high-speed rail project that Prime Minister Mahathir Mohamad had said he would cancel for being too expensive. Since returning to power last May, Mahathir had talked tough on Chinese investment, canceling a gas pipeline project and warning against what he called, quote, a new version of colonialism. However, negotiations on the East Coast rail link are progressing better, with China willing to reduce the $20 billion price tag.
They are quite willing to scale down, if you like, the size of the project and also the cost of the project. So the discussion is now probably, for lack of better expression, in the last mile.
Sterling rallied the most since November 1st on optimism of a Brexit breakthrough before Parliament takes control of the process next week. UK Prime Minister Theresa May meets EU Commissioner President Jean-Claude Juncker later Wednesday, with Downing Street talking of a significant plan to break the Irish border deadlock. However, the indications are that Brussels is not expecting much from these talks.
There is not enough movement for me to be able to assume that it will be a productive discussion. An unregulated exit of Britain from the European Union would have devastating consequences for both Britain and Europe.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
The GST Council will consider lowering GST on under construction properties to 5% from 12% currently in its meeting today. The proposal is from a recommendation of a ministerial panel that suggested that GST on under construction properties should be lowered to 5% without allowing the benefit of input tax credit. The panel also suggested that GST on affordable housing projects should be lowered from 8% to 3% or lower. This will also not allow builders to avail input tax credit. Another ministerial panel, which was tasked to look into taxation related issues in lotteries, has also favored having a uniform rate of 18 or 28% for both state-run and state-authorized lotteries. Currently, state-run lotteries attract 12% GST, while state-authorized lotteries, which are run by private players, have a GST of 28%. So now the ministerial panel has favored having a uniform rate of 18 or 28% for both state-run and state-authorized lotteries. The panel had to submit its report to the GST Council before the next meeting of the Council, that is today, but it is unlikely that this proposal will be taken up in the GST Council's meeting and is expected to be deliberated further.
Anywhere in the world, when we are talking about defense procurement, it is a process, and the sovereignty of the process and the integrity of the process takes precedence over anything else. And we respect that process. We have a couple of programs we are talking about. One is the Avro replacement, which we are in the process very much so.
Who are you partnering with? Is it local?
We are partnering with the Tatas on that.
Okay. Tata Advanced Systems.
With the Tata Group on that. And we are right now, we have concluded commercial negotiations and we are in the process of that. And we're optimistic about it, and that program will be a sole factory that we will construct in India, and we'll manufacture. And what it does is, when you put an ecosystem like this, you will create about 2,500 jobs and you will create about 8,000 skilled jobs in the ecosystem. So that gets created not only to manufacture the aircraft, but also the tier 1, tier 2, tier 3, and it becomes a sole factory for export. The same thing with the helicopters. We've just received the EOI for the NUH helicopter.
This is not the SP program, this is a separate one.
This is again, we have a partnership with the Mahindras in this, and we are very excited about it, and we believe as we progress through it, and once the contract is awarded, it's a competitive bid. There are multiple other people.
Where are we on that process?
We have just received the expression of interest, EOI. But as we progress through the process, again, there will be a helicopter manufacturer in India, which will have a multi-tier impact on the ecosystem of India. All these programs, you cannot, I cannot emphasize the impact they will have on I would say the multiplication effect on the aerospace supply chain.
So when you say that you're going to have manufacturing here, it will be a full system integration happening in India, or is it again going to be, aerostructures been made and assembled overseas and brought into India?
So this is a sole factory, not a satellite factory. So the actual, there will be only one factory in the world, and that will be in India. And then the tier 1, tier 2, tier 3 will be in India. And below the factory, there is a minimum requirement of 40% of the next level to be also sourced from India, not from outside. So it will be quite deep in all these cases, which should give us a lot of hope and optimism in terms of the trickle-down impact it will have, not only on the manufacturing base, the supply chain, but also on the skilling, which is the biggest, I would say, advantage or the biggest benefit we would get from this program.
Normally, when growth comes in, your revenue should increase. But as most of our growth is coming based on management agreements, the only thing that gets added to our top line would be the management fee income, as the P&L is owned by the ownership. So I think there will be a healthy growth on management fee incomes by definitely around 20%.
You know, also this will, you've talked about your profitability improving, your EBITDA margins improving, and how will that improve? What are you working on to actually increase your margins? Because you've talked also about selling your non-core assets. Will that also help you in increasing your profitability, and also how will that reduce your debt?
So that is a good question, because see, when you sell non-core assets, let's say we sell 3 apartments, that is not a part of EBITDA. It goes below the EBITDA line. The EBITDA margin is really a result of operational excellence, in which you are improving the top line and optimizing your cost to get to a healthier bottom line. In what the first 9 months of this year have shown is we have gone north of 2% of the 8% that we had promised over the 5-year business cycle. So, and I see personally no reason why we should end the year less than 2. So we would have that 2% increase already in the first year into Aspiration 2022.
Also, can you tell us what's your debt reduction plan? Whether all of the money that you gain via the sale of non-core assets, how much will it be by 2020? What are you looking to, liquidate, and whether it will only be used for debt reduction?
Well, we have come to a very healthy level of debt, which is today at 2.33 to EBITDA, and I think if we can take it down around 2, ideally 1.99. That would be the focus of the management, and I think we can get to that number without selling any assets, by just improving our EBITDA margins, by improving our absolute amount of EBITDA and increasing our top line, and obviously by not taking new debt.
So let's look at what are the important stocks for today. Yes Bank clarifies on the risk assessment report and states that it could be made public. They disclosed the information, otherwise the information would have been leaked or misused, and they didn't capitalize in any way by disseminating this information. Then we have Indian Hotels. The company reiterates its focus on balance sheet optimization and profitable growth at analyst meet. The company was confident in achieving its stated margin target of 25% by FY23. Industry tailwinds and cost reduction will aid margin expansion, and focusing on monetizing existing land bank and employing asset-light model. SL Propack receives further ₹40 crores towards repayment of outstanding dues to intercorporate deposit. It already received ₹25.3 crores last month, and the balance amount is expected to be received by the month of March. Let's look at bulk deals now. There was Engineers India and Nalco in bulk deals. ICICI Prudential Mutual Fund acquired 33 lakh shares of Engineers India and 95 lakh shares of Nalco. Insider trades, Apollo Tyres Promoter Group PTL Enterprises acquired 60,000 shares on February 15th. Navbharat Ventures Promoter Group acquired 60,000 shares on February 18th. And Godrej Agrovet Promoter Godrej Industries acquired 58,000 shares from February 15th to 18th.
There's lots to talk over the course of the day, and you'll find all the live market action on Bloomberg Quint. And there are also a few stories that you should consider reading on our website, bloombergquint.com. Here they are. The Union Cabinet increased the dearness allowance by 3% effective from 1st of January 2019, a move which will benefit 1.1 crore central government employees and pensioners. The Cabinet has approved additional dearness allowance of 3% over the existing rate of 9% to the government employees, and dearness relief to pensioners from the 1st January 2019. And the state governments of Kerala and Delhi on Tuesday demanded deferment of the GST meeting scheduled today, saying a decision on the rates on real estate sector and lottery should not be taken through a video conference meet. In a letter to the Union Finance Minister Arun Jaitley, Delhi's Deputy Chief Minister Manish Sisodia said that such a crucial issue cannot be discussed through a video conference, and convening physical meeting is important to take a consolidated decision. And on that note, it's a wrap on this edition of All You Need to Know. Stay tuned to Bloomberg Quint for more news and updates.